right, we're live. Good morning, everyone. Sorry about the little delay. I realized I didn't grab my coffee, and I'm like, how am I going to trade without a coffee? All right. If you're here for the first time, just randomly stumbled across the stream, this is the Euro trade. My name is Marcus Stalker D. I've been trading for 18 years, 13 years out of that. I've been a prop trader. I've been with Topstep in some form of or other for about 10 years. And even though I'm a Series 3 qualified trader, I am not a CTA. Therefore, everything you see here is for educational purposes. Bruno posted the risk disclosure, so please familiarize yourself with that. Okay, so first thing I'm going to run through my trade from yesterday in gold, which I did do on live. It was pretty late, and then I first entered a trade thinking my position risk limits are going to be there, but then realized that they've switched our live accounts just to OCO brackets, which is actually amazing. So once I realized that, I quickly adjusted my position. So that's what you're seeing here. Initially, I went in at a lower price of 3816.7. Realized that I don't, like, there was no stop loss place. So I was like, what's going on? And then I finally realized that we have the OCOs. So I quickly created an OCO, initially used a 35 tick stop, and obtained a better price. So there's only 2 micros for from 3817.5. And then, in true D style, I held on to that and held on to that. Why? I'll explain in a minute. And I held it pretty much almost till the end of the day. So I exited at 8 o'clock 19, so 19 past 8 my time. So that was literally like 40 minutes before the actual end of day. Why did I do that? Because yesterday for COMEX, the price actually opened outside of value, and it never actually took the liquidity of the previously established overnight high. Now, to me, that's a pretty bearish signal when they even don't make an attempt at slightly going higher to grab everybody's stop losses. Who's they? The wizards, market makers, of course. But they never did that. They just kind of stayed in a consolidating area. And my bot is not designed to do those. It's actually designed to run the trades only when we have a breakout. But as a human, I can obviously adjust. So I looked at Bookmap and I thought to myself, this is actually struggling and it's growing in shorts, right? So I kept seeing more shorts kind of trying to come in, whether it was profit taking or what, I don't know. But I decided that I was going to hold on to this. When it dropped below VWAP for a brief second, I think this is when Powell was talking, and I thought to myself, well, let's see what happens upon a retest of a supply that we created earlier in the day, and sure enough, it reversed. After that, I just decided to almost hold this for the auto liquidator. But at one point, and as I was getting ready for bed, because I do go to bed pretty early, this drop happened. So I was like, okay, perked up. And then I dropped down to a super low time frame and decided that this was good enough. So this trade took quite a few hours, obviously. That's normal for me. But I grabbed 313 ticks out of it on the live. It was on a micro, 2 micros, but it was still net somewhere around 500 and something on the day. So, you know, very small size, lots of ticks. And with this little boo-boo before, net, I think I was up on the day like 535. That was the only couple of trades that I did. Okay, so sort of a one and done, right? And the main reason for that was because of the lack of liquidity grab over the overnight high. and also the mean reversion potential, since we opened around about 1%, just over 1% distance from the COMEX value area high, which was calculated from the previous day. Usually this is something that happens on gold, where if it doesn't go into a continuation of a trend, usually they will, and yet it's struggling and it's not really making higher highs, it actually has a pretty decent chance of smashing lower sort of towards the end of the day. So knowing that, I was like, yeah, let's just hold it. I also looked at Heiken Ashi on a 30-minute chart. But yeah, so it was it's a fairly straightforward trade for me. Although, like I said, the the bot is not designed to do that. The bot is designed to take out the highs or the lows and then to run it through the majority of the Asia range. Now, the Asia range yesterday was pretty massive, with the overnight range, however you want to call it. And to me, that was actually a pretty decent trade. Rick No says, D, in case no one has mentioned it, if you mess up your charts, Control Z can fix it. Yeah, I think I tried that last time, and for some reason it would not come back. We'll do this later. So yeah, let's have a look at what gold is doing today and whether we can find any sort of setups slightly later. I am going to move the overnight high and overnight low to new areas. And this is probably not going to be COMEX value high today, because that's going to be higher. And for now, the high is sitting at 3812.6. The way my bot is designed is to keep scanning for new highs and new lows before 1140 on gold. So so as far as the bot is concerned, we do have a high, but it's not kind of set in stone yet, so this is not a proper reference. Let's now also have a look at the quantitative extremes. So they are located 3827 for ADR high, and the ADR low is 3768.4. Whoops, no, that's the wrong one. 68.4. There we go. Next on the list is the COMEX value. Value low at 38,015. So we're just touching that now. It's still kind of contained in the same area. I'm going to grab another horizontal line and see where the value high is located today. 3818.8. Change that to the purple and give it a name. All right, so those are kind of my first few things that I look at. Always the same, right? Always the same. Next up, let me see what the options levels are doing and whether there's any confluence with these existing areas. Just gonna update them. Update them. I'm gonna update them. Is that really weird? No, I'm sorry, I've got frogs in my throat today for some reason. Ribbit. Alright, so the core resistance from what I can see is still up at 38.25. Same level that it was yesterday, and actually for the end of day trading, all of the GEX levels have not really moved much at all. I think we had GEX 3, which was located all the way down at 37.80 yesterday. Well, that's now up at 38.30, so that's changed. GEX 1 still at 3,800. So not too much change. Is this a consolidation? Maybe. Does this mean that we found a temporary top? For now, for this time of the day, yes. Okay. Doesn't mean that that might not change throughout the day, but at the moment, it is actually quite sensible, I would say. Sensible is the word. Sonny wants to know, how do you get COMEX value number and what's the purpose? So the value area from the market profile concepts is a fancy way of saying where the distribution curve from yesterday's regular trading hours happened. So whatever they did during the active hours, that creates a distribution curve. The edges of the distribution curve are quite important, especially if you're opening outside of that. Why? Because there's this behavior across the board for many, many decades where the prices that have gone too far out of the distribution curve tend to revisit the distribution curve. So it's a mean reversion opportunity, right? So that's why it's important to know whether we're opening inside value, outside of it, and how far. And with each of those conditions, I call that the open sentiment. With each of those conditions, I have playbooks to help me orient myself and find some situational awareness in the chaos. Usually, if we open inside of the COMEX value for COMEX, which opens later, that more often than not will lead to a more range-bound day. So at that point, if I'm going to do any sort of a breakout trade, I will wait for like unequivocal sign that we've really broken out of that area, and it just keeps going, because 70% of the time inside value days will also end up as neutral day types, so meaning that the price just pulls nowhere, you know, both sides are equal strength, and then anytime they try to take it outside of value, one of the market makers will smack it back inside it, and vice versa to the lower end. But if the market opens, let's say, just slightly below value, that's actually considered bearish. And I will try to see how the price behaves on a retest of the COMEX value low, because that's the nearest reference point. Alternatively, if I'm not able to get in on that, I might look at a break of the first hour trading range. So I will wait for that first hour to be done, and then I will see whether I can get in on a pullback into either the nearby supply area. Sometimes it can be the initial balance low as well. So the initial balance is the first hour of trading. So you have the initial balance as the first hour of trading. You have the value area as the previous day distribution curve. And then you have quantitative extremes, which tells you, whether you're in an outlier day, meaning that it just keeps going and going and going, and we've ignored those levels, or are we on a pretty normal day? Another reason why yesterday was such a good area to short from is because we hit the ADR high from yesterday, which was somewhere around 38.21, I believe, maybe even slightly lower, and it just never really managed to gain any traction above it, and that's the expected behavior for that level. When you have the days where the market ignores that level, that's when you should go, is this another trend day in gold or copper or platinum or silver or whatever else you're looking at? Because there is a higher chance that you will be looking at a single direction day on the days when the ADRs get exhausted. And the earlier that they get ignored and exceeded, the higher the chances of a continuation for the rest of the day. So we have Asia, LME, and COMEX as the three main sessions. LME is the London Metal Exchange. that starts trading at 11:40 a.m. my time, so in another couple of hours or so, just under it. And that is the first sort of time of day when you see the price action livening up, coming alive, and things start happening. When it's this early, I don't like trading gold. I've said this many times. We are moving the show closer to LME open because of that, because these shows were meant to be DAX trading, but we never managed to implement DAX to date, right? So if it comes at some point, that's great. I will certainly be trading DAX in the morning, but I would like to keep the new metals show that we're going to be starting next week focused on metals, and therefore we need to trade at the time of the day when we have something going on in metals. So London Metal Exchange opens at 11:40, then you have COMEX that opens at 1:30 p.m. my time. I'm in the UK, by the way, in England. Now, I've been trading for 18 years, so naturally my way of reading price and levels is probably going to be vastly different than somebody who's been trading for 3 years, 5 years, and even 7 years. Why? Because I had more chances to go through some very turbulent times and to see whether my system was robust. And I never found that simplistic approaches work for a couple of decades. So I wanted something that is going to be scalable regardless of the volatility of the product. So whether we're going nuts for COVID, or it's a semi-apocalypse, or we're sort of trading in a range, I wanted to have a way to figure that out as early as possible, to adjust the sizes of my stops and my positions, whether I should size up or size down, and to see whether we're going to trade breakouts and momentum, or whether we're going to be looking at more range-bound trades. And to me, just trading one thing, just trading, let's say, mean reversions from opens outside of value, it just didn't cut it. It didn't cut it because I kept running into periods of time when I couldn't read what's going on. And I'm nosy, I need to know everything that's going on. Like, I'm very nosy. So I wanted to make sure that my skills matched the situational development of price. Now, I was always more of a mean reversion trader. I started out only trading supply and demand, swing trading Forex. So I traded euro dollar for 5 years before I even stepped into futures or touched anything else. And I did really well. Yes, sure, I made some rookie mistakes in the beginning, but that kind of earned itself eventually. But when it came to intraday trading, I was in a whole new world of trouble. Why? Because I could see that my levels are gonna play out, but I didn't have the time intraday to hold them as long as they should be held if that event of moving away vastly from an area doesn't happen that day. So my stop losses were too large for intraday. This was 13 years ago. My risk reward as a result was not really good. I think I was getting 0.5 R, and for that you really need to maintain accuracy of like over 70% to make the whole system stable. So I didn't like that, and I was like, this is not good enough. Like, I need to find other ways how to approach the market. And the very first that I started thing that I started adding on to what I was already doing to time my intraday trades better, I started using the quantitative extremes. And then I had some days where it went into an outlier day and ignored the ADRs. So it's like, now what? Now what do I do? So I figured out a way to tweak the idea of the average daily range, which is what ADR stands for. And I thought to myself, well, I just wonder on these days when the market goes completely insane, whether I can maybe just use the regular trading hours and calculate the average session range in the same way that I'm calculating average daily range, but we only use RTH, so regular trading hours. And that's when I did all of this in Excel to begin with. Now I have a software development company, so we have indicators and tools that are helping us. And actually, I've been working on a Discord bot because obviously we are going to translate our indicators to other platforms. But at the moment, that's taking a lot longer. And the workaround is that we are going to come up with a utility Discord. So it's not going to be like, oh, a Market Stalkers community. It's going to be the Blatic levels. And we're going to be posting our levels, which are highly requested, in that brand new Discord. But I'm not finished with it just yet. So we just created a tool that will enable us to pull our levels, and then that's going to be posted just as a message in there, and you can take those levels and plop them on any platform that you want, and then you will have your Blatic levels while we are working on translating what we do to maybe a couple of other platforms. So yeah, it's been amazing to have my tools, and you guys have seen my white charts. And I know every time I pull out my white charts, people are like, Dee, you're a psychopath. Why white? But I like white. I like the white charts. I don't know. I'm old. So my eyes are going. So here's the chart of copper with my tools where I have all of my data. And I don't need to do anything with it. So this blue line is the settlement. I have the graphical overlay of the TPO profile. The TPO profile is actually also on this side, so this is exactly the same as this, but I wanted it overlaid on the chart, and we were the first ones to do that. Since then, many companies have followed what we've done. And I think when I was trading, profile was always in an entirely different area. And then these dotted lines, they are respectively ADR low, ADR high, and then average session range high, average session range low in the blue little dotted lines. And then I have the value areas that are usually very easily changed. This is COMEX, this is copper, obviously. So this is COMEX value, this is Tokyo, and then I have the LME value as well. So literally at a click of a button, I can get all of that. And it just makes my entire process so much shorter than it used to be. You know, I used to drag out the time, the tick values from the platform. Then I would import them into Excel, and then I had all of these formulas and stuff. I was the Excel queen at one point, but it used to take me like 2-3 hours to get all of this detail out into where I could use them the next day. It was annoying. So yeah, when I was able, I commissioned an architect, software architect, to help me with this. And now it's just like clickety click, and you've got everything. So you know, it's much less painful. So to me, it's very important to know what the overall ranges are. It's important to know which of the sessions has the biggest range out of all of them, because that tells me which session I should be trading. And I also have a way to scale my stops to the volatility of the product. So should I be using 70 ticks on gold or 35? Obviously, it's a case by case, but generally gold, because of the size of the 30-minute candles, if I want to hold a trade, that means my stops really need to be like, either the entry has to be stellar, and you know, in an area where the price basically goes away from and then effectively never comes back to it, or maybe tested once. Otherwise, if I'm trying to run an intraday swing over a number of hours, I really need to make sure that my stops are in a strong position and that they're not, you know, tiny, because that's never going to survive. That's more conducive to somebody who's looking to skim like 10-20 ticks. I'm looking to capture anywhere from, well, it depends what I'm trading, but let's say gold, I'm aiming to capture anywhere from 120 ticks up to 300. Sometimes even a little bit over, like yesterday, right? So because of that, I always prefer to trade with smaller size and to have slightly bigger stops than most people. And that's how I'm able to sit on these trades without any any emotional involvement. Not that I have much emotional involvement to this point anyway, because I know my setups, I know my playbooks, and I know the outcome of those. So I just don't freak out anymore. But yeah. All right, let's have a look. Sarah is here as well. Good morning. Very good to see you. Rick No says, where do you see options levels? Now, options levels are taken from the options chain, but there is a company that does that really well already. So I personally use MentorQ. If you want to learn more about how I use them for intraday trading, on my YouTube channel, you will learn how to read market structure first, rather than getting involved with fancy, slightly more complex tools that take, like, it's not rocket science, it definitely isn't, but just the fact that trading requires you to pull a whole bunch of things all at once and to remember all of the things that you have to remember at the time of coming up with a trading idea. The more novice you are, the more difficult that outcome will be. And a lot of the times there will be a lot of mistakes. So, throwing a whole bunch of fancy tools right off the bat is probably not the right decision. So, if you've been trading for quite a few years and you've already come across some of these tools, but you want to know more, that is where my content can actually help you. If you've ever watched any of my YouTube videos, you know that I like to throw in a bit of humor in there. So it's not all just cut and dry, me kind of just sitting there with no face. I usually like to have a face on because I feel that it connects to people more. But I also like to crack jokes. My dad was a comedian musician, and I grew up with stand-up comedy in our house. And I think I wanted to carry that into trading, which can be a little bit dry. There's nothing worse than when I try to watch a YouTube video on something and the presenter is just like looking like they died about 3 days ago, and they're just talking in a very monotonous voice, and they look like they've lost the will to live. I switch off, right? I don't want to watch that. I want to watch somebody who's like knows what, okay, most of us know what we're talking about, right? But if you have someone who is monotonous, doesn't joke around, and it's like, come on, Bruno says stream is lagging. Yeah, not much I can do about that. I think that's on YouTube buffering side. How's the stream for everybody else? Any issues? Again, not much I can do. I'm just running Starlink from here. So yeah, Rick, to if you have been trading for a few years and you want to know about options levels that I use for intraday trading, I use a company called MentorQ, right? So you can check them out. So yeah. What are my thoughts on the data out of Germany? Well, since we don't have DAX, don't have much thoughts on it because we can't act on it, right? For now, it doesn't seem to have made any movement in DAX. I'm just looking. So probably not much. Probably not much. So yeah. Sunny is asking, where do you get the level or the exact number? Do you go to a website? Well, no, like I said, I've got my indicators. But soon, like I said, soon we're going to have the Discord where you will be able to get those levels as well. And it's just going to be a utility Discord. I'm not starting, like I will never have a signal service or anything like that. If I wanted to be a CTA, I would have done it years ago. I don't. I think it's like my version of hell. Because the amount of documentation, disclosure documents, tracking and everything, your life just becomes one big record-keeping hell. So for me, that's not an option. Maybe if I was, maybe if I was somebody who was involved in the financial services from the time when I was in my 20s, but I wasn't. My first job was being a session musician for many, many years. I started performing in 1994. I was only 14 then. But I started working because I really liked it. And then my dad had come with me to clubs that technically you should be over 18 to go in. But they, you know, they were hiring us kiddos, and we got a lot of jobs because we were interesting, right? We were like all really young kids between like 14 and no, actually, my guitarist at the time was 12, if I remember correctly. He was and still is a music prodigy. Now, obviously, we're all old now, so you know that's a very, very long time ago. And then I did that for 20 years. But in the final year before I decided to definitely go into prop, I already started to wind down my touring and the gigs that I was doing because I just wasn't happy with the music industry. It was kind of a few years after the credit crunch, and it started to show. I had really high level gigs. You know, I worked with some incredibly big established artists, and it just, I don't know, the flights, suddenly we were being put on these flights that were like 7 hours, even though we were just going to like Italy or somewhere. But they were like, yeah, let's fly through Istanbul for some reason. And then you would just arrive there completely out of your head from no sleep and just being tortured in a plane. And then hospitality went down. You know, at one point we didn't even have a hotel. They were just like, well, no, you do the gig, and then you have to go back to the airport like right away. I was like, what? Ooh, I still, hold on, I've got a little bit of a boo-boo in my bot. So let me just get my little AI minion to sort that out, because that's something it can do. Check for errors and then find why it's happening. Okay. Let's have a look. Smoke Tuna says, using a single indicator might now work well. It all depends on your trading style. Sometimes it's just better to stick with simple indicators. So here's the thing. I am a bit of a chameleon when it comes to trading. After 18 years, you have to learn how to do all sorts of trading. And maybe if you're like a swing trader, you can get away with one type of a setup. But the reason why I have my chameleon Bob over there is because I'm able to switch how I'm seeing the market. So if it's a range bound day, I will put on my Dolby hat, Nick Dolby from Topstep, and then I will try to look at the edges of the ranges. I have a different way of doing it, so it depends on what kind of a day we have. I will either do the initial balance and then look for the extension of the initial balance to happen before I initiate a range trade. Or I will look for Asia high, Asia low as my price points. So, you know, I was actually really terrible at range trading in the beginning. Really terrible. Like, I just could not make it work. And I was like, how in the world do you range trade? And then I spent probably a whole year trying to get better. And then it probably took me another 4 years before I wasn't making any mistakes and I knew exactly what to do if there's a range there. And this is why I gravitated towards the market profile side of things, because it can actually show you in real time what's happening. And to me, that's invaluable. So I would be classified more as an order flow trader. So at the point of entry, I want to see certain events happening on the tape before I get involved. And then I make my decision. And typically for range trades, I like to take profits in the middle of the range rather than making it rotate throughout the entirety of the range. Maybe sometimes I might extend that to, you know, 75% of the range, but generally 50% of the range or whatever you're using, whether it's, you know, TPO profile or Asia high, Asia low. You know, that is the way to find a systematic target. You know, where are we in relation to the range? Are we 15% through it? Are we 50% through it? Is it too late to get involved in a range trade because you missed the boat and now it's back to the middle? Things like that can really throw you off in a range day, especially if it's like a really tight range. I hate trading to this day range days that are super tight. So you don't even have a span to work with. So the margin for error is just like non-existent. Sana says, hey Dee, have you looked at distributing your signals and levels via Kafka? No. I will never go beyond the software development side, so we can give you the levels that are just there, factual levels, but I'm not giving anybody any signals because, again, that is illegal according to the CFTC rules. You can't just distribute signals because that's trading advice. Like, I don't know how we managed to fly under the radar for so many years where all of these people are like, oh yeah, sign up to my signal service. And a lot of them actually scammed people through crypto. It's like, you should not be giving out signals for any sort of investment or any sort of directional bias unless you're a CTA or you are a commodity pool operator or something. So CPOs, CTAs, distribute away, right? But anybody else, most people don't even have a Series 3, which is kind of like the bare minimum if you want to do anything publicly. So I don't know what's going to happen if this, if the regulation starts raining down on prop firms. That's going to be very funny. Because you're just not allowed to do that. Like, over in the UK, they're even more strict. We have MiFID II, which means that if you are a company even remotely involved in trading, if you have ever told people, hey, these are my levels, you need to act on this and short platinum or long gold or something, they will come after you. Like, they will actually, the whole FCA will come down and fine you, and the fines are just eye-wateringly big. Some people even ended up in jail doing that, and they were just trading from home. They're like, well, these are my signals, I'm doing pretty well. It's like, it doesn't matter how well you're doing, you are effectively distributing investment advice without regulation. That's very, very frowned upon. So yeah, so no, I will not be doing signals. I don't want to do documentation. I have no intention of doing disclosure documents. I'm too old for that. And maybe some people see that as like, oh my God, let me get my stuff. I've got everything I need in life, right? I'm not looking to change anything anymore. So I'm just happy where I am, I just want to play with my dogs, be in my house, and not write disclosure documents until my eyes bleed. Jeffrey says Starlink is bad. Elon must be streaming Diablo, using up the bandwidth. So I have the business one, and this is probably not going to be Starlink because Starlink is actually incredibly fast. If I didn't have Starlink and if there was no Elon, I wouldn't be able to live here because we live out in the sticks and there's no broadband. The phone reception is non-existent. The only place where I have phone, even though I'm with a pretty good company here, the only place where I would be able to get a signal is if I hang my head over this window, or I actually go outside to the bottom of my garden and then just go, oh, there it is. Okay. So without Starlink, this house that I'm in now would not be possible. So yeah, I don't have a problem with Elon. I think many people have a problem with him. I don't know why. I think he's trying to push some boundaries. Right, let's have a gander at copper. They have butchers. You want to try and sound more street? I'm not street. Where is the low? Okay, we're just creating it now. Now, overnight high has already been kind of established, but overnight low, this is where it is now, but it's probably subject to change until we... So here's the thing, copper, I have my algos set to scan it as an overnight range all the way up until 1:30 p.m. So literally when COMEX opens, that is when the bot stops trying to figure out the overnight range. So that's different in copper because I found that those liquidity sweeps are more likely to happen during COMEX for some strange reason than they are for LME. But gold likes to take out LME levels, or it starts to take out lows and highs already for LME, and a lot of the times copper just doesn't even reach them until COMEX start trading, probably because of both of the exchanges doing volume. All right, so let me have a look at where the value areas are. It was a quiet day yesterday. It's not quite yet time for copper. Copper will start kicking up usually halfway through October. So when the cold weather begins, that's when they start to exhibit a higher interest in copper. So COMEX value low 63.30. And then COMEX value high 64.15. So already I can see that that's pretty much contained inside the overnight range. So I'm going to make an educated guess that unless something changes and we get some sort of a catalyst in copper today, which I don't think we have, let me just check the calendar. I'm guessing we're probably just going to keep bouncing between these. So 462 and 465. Snoop of caffeine. Yeah, so we don't really have anything today on the cards. We have crude oil inventories. That's going to be a storm in a teacup. Maybe we can have a look at crude oil as well. Even though I like to look at crude oil and then express my views either through RBOB or heating oil, because I don't really like trading CL anymore. Now, crude oil doesn't really do the whole Asia range because Asia range for the most part is a bit meh. And the reason why crude oil and RBOB and heating oil are so correlated is because those two are the derivatives of the main product. So you have crude oil as a commodity, and then you have derivative products. Crude oil makes gasoline, and it also makes heating oil. So there's a thing called the crack spread, CRK. I'm not joking, it's an actual thing. And we used to have whole companies that were doing crack spreads, and that's all they were doing. So yeah, COMEX is where I've traded crude oil the most, and I still think that, I mean, even though London can be pretty lively sometimes, I would still look at positioning myself probably after my 3 p.m. That's after 9 a.m. Central, because that's when you can get some juicy reversals going on. Alternatively, into the euro close. So crude oil, RBOB, and heating oil all have this big desire to turn around right into the euro close. So that's usually the time of day when I trade the energies markets. And euro close in Central Time is 10:30 a.m., I believe. Right, so right now, crude oil is just inside value. I know that we are hanging below the weekly lows of the range that we've been in for a while. So there is some scope to kind of continue higher, but just beware because crude oil has almost a permanent short bias to it, and you can get an odd day or two that kind of go the opposite direction, especially if you're coming away from those weekly edges. So if we've come down to a weekly range low, yeah, there's a good chance that we reject that, but to the upside. But as soon as you're a little bit further away, it just runs into any old area and decides to smash back down. So shorts have always been much stronger in crude oil. But yeah, so value area is 63.28. This is NYMEX value, by the way. So we are going to market that. 63.70 is the value high. And like I said, there's a huge time of day component in crude oil. If a level gets reached, but it's not in the right time of day, I will stay out of it. Because I want everything to line up. Time of day, level, price action. And again, always the same thing, right? Average daily range low, 62.62. Change that to the dash line. And then ADR high, 64.50. That's a nice round number. Probably have some options levels there too. And for crude oil, because it's not as speculative as some of the other products these days, and I think that's the reason why we've actually gotten less movement over the last year or so. The options levels are actually pretty spot on. I like to focus around the gamma walls, GEX 1, 2, and 3 as like the primary choice. And at the moment, I do actually have a GEX 3 level up at 64.50. So that tends to be, if you're in a positive gamma environment, that tends to be a stabilizer. So basically, if they run it up to that level and we are somewhere around the euro close, it's very likely you're going to see a sell-off from there. Just probabilistically, it's nothing that, you know, I'm not advising you to do anything. I'm just saying probabilistically, we see around 70% of reversals at that time of day. So if you can find a level that might be a stabilizer to that rally, that's definitely something to consider. But again, you have your own plan in your own eyes. Whatever I say, just backtest it. Just go and see how the market behaved at that time of day. Was there a level there? What was the level? That should go in your plans. So rather than this dear John kind of letters that everybody is writing, I'm really terrible, I don't follow my rules, blah, blah, blah. Yeah, why don't we look at data? Data first, and then somehow miraculously, data, less trades, easier to track, better progress, right? We're all here to progress. So let me see what environment we are. I mean, technically, if we are above something called the high volume level in options, it should be positive gamma, but it's not quite that simple sometimes. So let's have a look. And again, whilst I do my levels on crude oil, when crude oil gets to that point and to that time of day, it generally acts one way, but it doesn't have enough ticks in it, so I just express my view in RBOB or heating oil, whichever one looks best at the time. Right, so we are in a positive gamma environment, so that is actually true, which means that the 64.50 level as a GEX 3, gamma exposure 3, if there's a rally up to it, it will act as a stabilizer rather than an accelerator. Okay, so you have accelerator levels and you have stabilizer levels. Well, in a positive gamma, the X3, outside of any sort of external catalyst, more often than not will definitely act as a stopping point. It might overshoot it a little bit and kind of dance around it, but I actually like to observe that happening. And sometimes it just go rally it up to GEX3 and it just touches it and immediately just goes back. It doesn't even allow you to actually get in. So unless you're like a fan of limit orders, which I'm not, because I like to have more control over my entries, it's very difficult to catch. Very difficult. But yeah, RBOB and heating oil are highly correlated products, so I use crude oil, so whatever level. Like let's say I'm in a short trade and I'm looking for VWAP as my ultimate exit. So then I see RBOB touching its own VWAP, but crude oil still has a ways to go. What's going to happen? More often than not, RBOB is going to overshoot its VWAP until CL, crude oil, reaches its VWAP, and then we're going to see some sort of a reaction from it. So that's kind of a correlation thing, where RBOB is a crazier product, so naturally it will overshoot its own levels. But then we have like this benchmark from crude oil, which is like the initial product that we're looking at. When it touches its levels, that tends to be more accurate. So that's how I use correlations in a very simplistic way. How do you get your dome to look like that? I pay for level 2 data. So there is a section in your billing area to add level 2 data, which I believe is about $39 a month or something like that. And it provides you with the depth of market, which is what you're seeing here. So you get all of these additional prices, which show you what the actual exchange orders are doing, right? These are all resting orders. They're limit orders up for grabs. You know, anyone can become a resting order if you're in the live market, but it's a pretty good way for me to see what's going on, because sometimes you can spot, like for example, let's have a look at what's going on in crude oil. You can spot bigger players. Like for example, right now we have 32 and 56 contracts, which is not massive. They actually might get taken and they might become liquidity for whoever is longing this at the moment. So all you need is just like a bigger player to step in, and then they get ahead of them, and then they take the order book to the opposite side. Because the exchange has to match every single order with an opposing order. So naturally, if you're like, let's say you have like 100 contracts to do in crude oil, and you want to long it. So in order for you to long, you need to find 100 people who are on the opposite side. So this is why you see those run-throughs very nearby areas. But on crude oil, if you have a bigger order that is somewhere higher up or lower down, they will hunt that. But they won't necessarily take it through that order, because the move was already pretty sizable. So it's and in fact, what I love seeing on crude oil is when you have a stack of them. So let's say 64.50 is a ADR high and GEX3 today. Let me take the auto scaling off. And right now we have about 98 contracts there. There's another one at 64.39, which is 106. So those areas will likely become areas as a liquidity draw, right? So you have people up here and you have people down here that are trying to execute their institutional orders. A lot of the times these will be commercial hedgers, so you know they have to buy like oodles and oodles of oil, and you know that's like very big positions. So in order for them to execute their orders for as less cost as possible, they want to do that in the areas where there's enough liquidity for them to do so. Does that make sense? So if you have 100 contracts to fill, is it better that you kind of do multiple round trips and you kind of keep keep smashing, you know, 5 orders, 5 lots, 5 lots, 5 lots, 5 lots? Or can you just execute once for, let's say, 50 and then another 50? That's just 2 executions, and much easier on the eyes, much easier on the wallet, and it's just one of those things, right? Save on the execution costs. But in order for them to do that at the lower costs, they need to get involved at areas with higher, deeper liquidity pools is a better name. Deeper liquidity pool. So if you're somebody who trades with size, you can't just enter your scalps willy-nilly wherever you want, because what you'll find in the live market, even if you want to trade with like 15 contracts, if there's no 15 contracts available in and around the prices that you're looking at, you will be at the back of the queue because you're trading with a little bit more size. Only the ones who are trading with like 1, 2, and 3 lots, they will be at the top of the queue. But the larger your order, the more in the back of the queue you are as a retail trader. You can actually pay the exchange to actually get preferential treatment, but that's very expensive. That's like literally like preference over order fills. That's a service that is a part of the exchange and costs an arm and a leg. So there's that. So next time, if whoever has a live account with Topstep and you want to trade with like bigger size, then you enter your trade and it's hanging, like it hasn't actually filled it, and you're going, what the hell, Topstep? It's not Topstep, it's the CME. They've just put you in the back of the queue and there's not enough contracts there. So it's going to hang. The order is going to hang there until the price either moves up or down to the area of a deeper liquidity where they can match you with somebody else with the number of orders that they hold. Or sometimes it's just, you can have a partial fill. So you want 15, but it only fills you like with 5. And you're like, well, I wanted 15. Well, same thing. The order is it depends on how the platform is set up, actually. And in some of them, you can actually set to fill or kill. So fill everything or nothing, or fill a partial. I don't like to fill anything partial because it feels like it skews my risk model, because I never know which size I'm going to be in on, right? And it's like, well, that's not a part of my plan. And I try to be as consistent as possible with my sizing, because I know what it's like to trade with size. Traded with size back in the day, it's a nightmare. I think the biggest order that I've ever had, for crude oil, it was about 120 lots, but for gold, I got up to 180. And to fill 180 contracts in gold, it's, let's put it this way. I didn't know that you can't get a fill. This is why I'm talking about it now. I thought you're just going to click and it's just not going to fill you, and so like hunky-dory, everything's peachy. So I tried to go in with 180 lots like immediately, and the platform just went bing. So I went, is the market open? So the first question wasn't, oh, is there enough orders to fill this larger position? Because I didn't know about it. I was like, is the market open? It's like, how silly of me. And then I kept trying, and it kept rejecting, and it kept rejecting. So I get my risk manager here, and I'm like, it won't, like, it's not filling me. And he goes, yeah, because you can't fill 180 lots like all in one go on gold. And I'm like, why not? What? So he explained this all to me, and I went, oh, I see. So what do I do then? And he said, you have a choice to partial your positions by like 20 lots, or whatever is around on the dome. So let's see how the dome on gold looks like. Yeah, so you have like 3, 8, 13, 12. So really, in this case, you would be going maximum by about 5 or 10 contracts. And then you would keep doing that as the price is moving around until you fill the entire order. So try and scalp with that mindset. It's just impossible. As a human, you wouldn't be able to fill such a large order and then still do a scalp. So at that point, I totally started moving away from any sort of an idea that if you trade with size, you can keep scalping, unless you're like an HFT or something. But even they have like staggered orders, and they execute them at like lightning speed, because they do have preferential treatment from the exchange because they pay for the service, and they can move the price as well. So they have that extra advantage that most of us don't, right? We're just small fish. And maybe you can move the market, like if you're after regular trading hours in RBOB and there's only like one contract on the actual dome, which has happened to me before, actually. I was trying to do a late trade on RBOB, and I stayed in from the settlement all the way till nearly the end of the electronic trading. And at the time, it was like 10 minutes before the close, and I'm like, all right, I'm going to get out of this. And it was only a 2 lot, but it was so thin. Like, it was like nothing, one contract, nothing, one contract. So I was like, okay, I'm going to kill this order. So I killed it, only a 2 lot, but because it was so thin, the price actually jumped to the next available. And I was like, whoops, whoops. So it can happen in super thin instruments, but in the instruments that you guys are likely to trade, like NQ, ES, gold, probably never going to happen. So yeah, it has to be like a super quiet time of the day. Maybe it's like a holiday and you have gaps in the dome. Sandy wants to know, isn't it 11 a.m.? No, we just tested that on Monday, primarily because I had the schedule slightly full for the old time. But next week, Monday, we should be running at 11 a.m. new time, Sandy. Senna, yeah, I am aware of Apache, but again, that's more for kind of like the license for the code that you want to, at least that's what I thought that was. For like, if you have a piece of code and you want to have people use it, we don't want that. Like, our code is proprietary and we don't actually want it out there. But yeah, the Apache license is usually something you can use if you want to share your project on like GitHub or something, and that if people want to use it, they have to use it under the Apache license. Correct me if I'm wrong, though. That's what I thought it was. So, yeah. Drop Straight says, I live in the sticks too. Half a bar if I stand at a specific spot. Got fiber though, so use Wi-Fi talk. Yeah, so Drop, so here's the thing. We have farmer out the back, right? So this whole estate is like a massive sort of 2,000 acre estate, and we own a part of it. And then the rest of it is owned by the farmer who's got cows and sheep and a whole bunch of things. But he said no to broadband. And because he owns most of the estate, there's nothing that we can do about it. And there's quite a few people with, like, not quite a few, because there's like literally like, I don't know, maybe about 5 people who own properties on this estate. It's a farmland estate. So it was really down to the farmer to say yes to broadband that was being offered a year ago, actually, because we moved in May and we didn't know about this. We're like, oh, okay, it's just out in the sticks, there's no broadband. But they came here and they asked, they said we're gonna install, it's called box broadband where we are, and it's like, do you want the the fiber optic? And he said, no, you're not digging through my farmland. And they were gonna, like, to be fair, to kind of see things from both sides of the story, they were planning to dig through a part of his estate. So it's like, well, it's farmland, like he's got stuff there, he's got grass for the cows and the sheep and horses. So obviously them digging through most of his farmland is not going to be something he's happy about. But I hear that there's another company now that is trying to do it like from the street side. And we are next to the street, not like immediately because I have a little driveway as well. But it's maybe it's gonna come at some point. But again, without Starlink, this would not be possible. Or maybe I could like build a little hut for my phone to sit outside while I have the pathetic 4G signal. I have done a stream on 4G, so it wasn't terrible, only once, because Starlink went down for some reason. It was that time when the whole world suffered an outage, so I had to do a stream, and I was like, well, I'm gonna try my phone. So I went outside. It was nice weather though, so it was quite warm, and I just put my phone on a chair in shade, and like it was a shaded area, so it worked, but it had to be outside. So if it's winter, what am I gonna do? Build it a house? So yeah, thank God for the remote installing services. Which levels matter more, futures, cash, or ETF? Roman asks. Well, I believe that all three of those are very different products. It's not just that I believe, but they are. Futures are derivatives of spot, of cash, right? ETFs are stable products that are also derivatives, but they're based on lower liquidity in order to make the entire product more stable for the investors to not freak out and to still be able to have very nice returns, but not nearly as crazy as futures. So I don't think that any of it is like, oh, more important than the other. If anything, I would say that cash is the benchmark and anything else is a derivative of that product, with very different volatility, with different intentions, and they're different vehicles for different purposes. So, you know, which one is the most important? Well, if we take the futures market, we do have this thing called the basis, where they are literally measuring what just happened. I have no idea. Something kicked me out. Did they force, maybe it forced, because there was an update. I don't know. Anyways, we're back. So maybe they forced an update, which is why I got kicked out, because it's not my bot. The bot is just running without a problem. Yeah, so the basis is literally the difference between the price of spot, aka cash, and futures. So therefore, it is an important thing, right? So the basis is a measure by which we know whether we are in contango, which is a normal occurrence where the futures prices are higher than cash, or are we in backwardation, which is a slightly unusual thing, can indicate issues with either supply or demand of the product. And usually that means that cash will be higher than futures. So that's called backwardation. And there are whole strategies in options and calendar spreads and a whole bunch of stuff that play on the basis difference to profit from it. And in fact, hedging, if you're a producer of something, let's say you have a gold mine, so you produce gold. And let's say that somebody pays you money to deliver that gold. Well, there's actually a way to hedge and lock in the best price possible by you doing a hedge in the futures market, just in case something goes wrong, right? Maybe the price of gold drops. Maybe you're on the other side. Maybe you're a user of the commodity and you want to make sure that you lock in the price that you paid for initially. So that's where the hedging of the basis can actually be very handy. It's like it's a whole thing. I'm not gonna go too deep into it, but just know that those are three different products, right? Three different vehicles for hedging and investing. And I don't think that there's anything that's super important, but out of the three, if like gone to the head, which one is the most important? I would say cash, because everything's based on the price of the actual underlying commodity, cash price. Jacob says, we're in a rural area, currently have DSL, supposed to get fiber next year. Yeah. Tim Hassan, how does one get these progress bars for profit and loss at the top of the screen? I have set a limit for data loss in my settings. but I do not see such a bar. I do believe that's a matter of the width of the screen. As simple as that. So if you have a like for example on my laptop, if I go away like this, those bars disappear. And I think my laptop is only 14 inches, so it's about this big, and it just doesn't have enough. It just doesn't it doesn't display the bars, but only this one, which is a 1080p screen, it displays it nicely. I'm not really a big fan of trading on a phone or a laptop or anything, unless you have like a massive monitor. When I have to, I will. You saw that on Monday, and you saw my medical procedure with wires sticking out of all the screens and everything. It's on my Twitter, by the way. And that actually got quite a lot of views. And some people were like, what is this? What have you done? Other people were interested to know, hey, how'd you get 4 screens? Like, well, what is that? Okay, Asus Duo, but what are those 2 on the side? So I like had to explain it, and it was nice. You know, it was nice to know that some people are interested. But as a general rule, I actually dislike trading from laptops and from phones. So I like the good old desktop, where I have full overview of what's going on. I have the little bars. It can tell me how far into profit or drawdown I'm in. And I don't know, it just makes everything a lot more manageable. And then I also have the coding side. So I have, you know, 3 platforms. I have Bookmap, Topstep, and my AMP futures charting platform. Then I have Cursor AI on one screen, PyCharm on another, Discord on yet another screen, because Bruno and I communicate through that. I have another screen where I only have like web pages and company Slack and stuff for further communication with the team. And actually our Slack went down at one point, and I was like, how do I talk to people? I felt so alone. It was pathetic. It was so funny because I was like, oh, well, would I have a problem? And then we were kind of thinking, are we changing the time zone? I couldn't get in touch with anyone. Didn't have I think I only have like a couple of people's phone numbers, but it just felt so horrible. Luckily we sorted it out very quickly, but yeah, it was an interesting thing. All right, so let's move on. Should we maybe have a look at something else? Let's have a look at maybe silver, because silver yesterday was actually trending a bit more, and it's very correlated with gold. But at the same time, actually somebody asked me yesterday, and you know who you are, a very good question in my own coaching portal about the correlation. The question was like, you know how CL is correlated heavily with RBOB and heating oil. Do the metals correlate in the same way between each other? So like silver, platinum, gold, copper. And it's a great question, but we also have to look at it this way. Each of those metals is its own entity. So you have silver mines, you have gold mines, you have copper mines, you have platinum, right? So they're very, very different products that exist in the world as an actual commodity, right? Whereas RBOB and heating oil are pure derivatives of crude oil. So you don't just mine gasoline out of the ground. You get crude oil, right? And then you refine it into something else. So that's why crude oil, RBOB, and heating oil are super correlated, whereas silver, platinum, copper, and gold can be correlated, but they're not like twinsies. You know, they're not like every single day all of the metals go either up or down. It's not quite like that. So what I usually have, I have a correlation quotient, however you say it, can't pronounce it today, to see how much they correlate between each other. And I can see that today, copper is actually not correlating to gold at all. It's actually minus 2.3. So that's, today there is no correlation between gold and copper. Let's have a look at what silver is doing. Hold on a minute. Just need to change something because I still have it on GCQ since I last did silver. Okay, so silver and gold for now are pretty correlated. They're almost to a factor of 1. Almost. Okay. Now I'm going to have a look at platinum. So platinum at the moment coming up to 0, really. So again, not super correlated. In order for two instruments to be correlated, they have to be as close as possible to a factor of 1, or completely negatively correlated, they have to be minus 1. And out of all of these, I think silver and gold are probably the two most twinsy metals. So there is a correlation, just not to a degree that some of the other products in the energies markets are correlated. And let's do the same thing because it's a very similar strategy on silver and on gold. So we will find an overnight high and overnight low. So this was the low. And for now, we have the overnight high at 44.56. And I'm going to make this into a yellow solid. Again, subject to change, yeah, because we are going to go up to COMEX. Then I'm also going to drag out the value areas for it. And we're going to be referencing COMEX, just like in gold. Because I know most of you will be trading later on. 44.394. Is that right? Hold on. Yeah, 44.394. That is 395. Let's round it up. That is COMEX value low. 44.685 for COMEX value high. Now be careful trading silver. You can do micro silver, but even that, I think you would probably need to go for 150K or have a pretty decent balance in the account before you can committedly do a trade without it hurting too badly if it doesn't work out. Because it's a big contract and it's a very liquid market. So ADR high 44.835. So if we overshoot all of these to the upside, it means the uptrend is still very strong. If we don't, then look for price behaviors around these levels. To the low side, so ADR low is 43,715. There we go. Any options levels? I have no idea. Let's have a look. Give it a minute to load. Nothing nearby. So we have a put support area at 44 evens. There is a GEX level at 44.50. But really, I would be interested in how the price behaves through GEX 2 at 44.75. Bit of a tricky outlook. Gamma wall all the way up at 45 evens. So way past this area. It is possible that they might want to smash into that first. So the most ideal situation here would be touching the overnight low, maybe overshooting a little bit, then reclaiming the overnight low, and then running it all the way to at least the ADR high, but maybe just going to try and squeeze it out, squeeze out a few ticks at 45. So that's a definite possibility. I still don't have any trades. Like, we're literally nowhere near my levels. Still dead in the middle of the Asia range on gold. Just establishing the overnight low in copper. So yeah, so I need to be patient. I need to be very patient, and I think I've done a great job staying patient throughout the entire summer. So I'm just going to keep that going. And hopefully next week, so from Monday, we'll be closer to the, the time of day when we might get a bit more movement due to the LME. And then we can start looking at some more trades. But again, it's going to be Monday. Mondays can be a bit slow. Do we have any releases on Monday? Let me have a look. No. So yeah, maybe Monday is not going to be the best one. And then Tuesday, Canada is a bank holiday, so that's going to be snooze fest probably for crude oil. But yeah, not too many things on the cards. We have just minor releases. I know they're kind of marked as red, like unemployment claims and stuff. But really next week is going to be the NFP. Then we're going to have the ECB rate decision next week, Thursday. So that could put a bit of pep in the step for gold. Hold on. Am I looking at the right month? Did I just get that wrong? Hold on. Yeah, so NFP next Friday. Yeah. Yeah, so I haven't gone totally insane. That's good. But yeah, this week, I suppose GDP quarter on quarter might be a mover. And the rest of them, for this week, it's all just super quiet. And then Monday, nothing. Tuesday, really nothing, apart from jolts. But that's not a super huge release for gold, typically. So yeah, it's we might be in some like waiting mode until NFP comes out, because that's the next massive release that everybody is following. So yeah, we're in the middle of ranges, still establishing ranges for the day. Asia, for the most part, had a little bit of a movement, but nothing like to speak of. In fact, copper looks very messy. I think gold looks a bit better. But even so, it didn't create a super big range. So yesterday, the Asia range was about 50, or overnight range. Let's not call it Asia because it's really just an overnight range. It was like 52 points or something. And today it's what is this, 37.82. Yes, it's not nearly as big. Let me have a look. Yeah, so it's about 29 points. So a decent range, you know, it's like 290 takes. So that means that if I'm aiming for some sort of a reversal, my profits are going to be either in the middle, which is where we currently have VWAP, or slightly above that. So 75% of the range either side. It's the same, very similar plan to literally every single day we've had. And even though gold sometimes does go into like these nice trends, I like to see them break outside of the Asia, and then I will look to get involved somewhere above the overnight high and ideally above the value area if we also have that. And then the next point of reference is to ignore the ADR high. If that happens, I will probably be trying to get in on that. But if not, then that false breakout, either from the high or the low, that's going to remain my cornerstone for today's trade, if any appears. If any trades appear. Yes. Great. All right, that's it for today. Again, no trades. Everything is in the middle of the middle. We're not going to be doing nonsense trades. So I will be here tomorrow for, fingers crossed, the final Euro trade hold time. And then we're going to be starting metals market or metal markets on Monday at the new time. But I will be on fast markets tomorrow. So you will see me a little bit more for the rest of this week. And yeah, let's see what the day brings. It's Wednesday, it's hump day. Let's lock out those risk settings because that's the first thing you should be doing. You know, this section. Go and lock out risk settings for the day. And then we can save ourselves from ourselves. That's all I have for you today. Hopefully you find this useful. Hit the like and subscribe on the way out if you're not already subscribed. And I will see you tomorrow for hopefully the final old time for the Euro trade. Have a good day. Goodbye.